Hey guys, today we're going to talk about why I think we have not topped. I made a thread about this going through a bunch of just like very reasonable high time frame data points and conditions that all point to higher. I posted this thread on Twitter down here on September 26th, kind of at this I guess scary local low. And obviously, it's played out pretty well. I'm not really shocked to see this. Timing pretty fortuitous here, just a couple days later. But let's get into why. First off, the reason I'm making this is because there were some very loud and influential people on crypto Twitter that here at what looks like kind of like a January 2025-ish complacency shoulder. We're like, yeah, I think we're topped, we're cooked, blah blah blah. And as we started to go down here, more and more people piled onto that. And I don't think like any of these like smallish or like even kind of significant pullbacks should be discounted as like possible or even probable. But like the whole cycle, quote unquote, being over, it just didn't really pass muster with me. You had people that called a top in late 2024. I made a thread then about why we weren't topping. Played out pretty well. Some very smart people said we were going to top in January. Things got pretty terrifying there, and I wasn't even sure it was going to happen, but that's because we had like a once a century trade war and the bond market almost broke. And yeah, I mean, things were sketchy here, but since we recovered from that and people are calling a top here just kind of based on like a chart pattern, ignoring like business cycle stuff and credit and liquidity conditions. I figured it's worth talking about, and I'm gonna go through all these today with the benefit of the relief of this having happened. But pretend like we're down here, and I will clarify my thinking. If you follow me on crypto Twitter, you've probably already read this thread, but I'm just gonna step through it and talk about it a little bit more. So we'll talk about on-chain, monthly RSI, business cycle stuff, 50-week MA, headlines, just kind of like basic chart extension stuff, total 3 and social signals. First off, just going through on-chain. Let's go through a couple of these. If you don't know exactly how these work, this is basically deriving signal of when we're overheated in a potential like shit's over for a few years way based on different moving averages, selling behavior, other statistics. It's not super important to do like a deep academic dive into these. They're kind of meant to be infographics where you can just look at it as an eyeball test. So I'm just going to walk through them like that. Otherwise, this video will be 3 hours long and even more boring than it already will be. First on-chain indicator here is pi cycle top. If you go all the way back through 2013, you'll notice that this orange line, which usually calls a top when it crosses the green line, 2013 it crossed over a lot. In 2018 it crossed over just a little bit. 2021 at what I think is the more significant top, rather than this later scam top during all the weird like hijinks with FTX. It barely touched. And then now, you have to assume like these diminishing returns will continue if you want to at least be a conservative or prudent. The green line, as of this thread, was sitting at 190K and the orange line at 112. The green line's going to keep going up. So if you want to get a top signal here, you would have to assume that Bitcoin would come pretty close to 200K before it tops. But since I'm in the business of trying not to get caught with my pants down and try to sell before the top, Let's assume there's like super diminishing returns, and it's not only does it not touch or like have a little gap, but let's say there's like a 50% gap here. That would still mean Bitcoin to 150K. And obviously, when I made this thread and took the screenshot, it was at 108K. Today we're at like 121K. We're nowhere near that, right? So it's like, I don't know, maybe this model is badly broken, but like given kind of like diminishing returns here, I would take this bet every day in terms of keeping my money on things continuing. MRVZ, you can see going back to kind of these dinosaur days back here, it goes into or above the red before a top. I drew a diminishing returns trend line here that's fairly aggressive. And we have so far kind of just done what is in the screen circle, like this kind of like between cycle noise, I would call it, where you can see our kind of like early 2024 local top, our late 2024 and early 2025 local top on Bitcoin, and then just kind of like some noise here as we've kind of ground back up to new highs. But this is still pretty cold, right? Like we've had our local tops at like a 3.5 here. And, you know, even if, again, like Pi cycle top, we have this diminishing returns trend line, you want to be even like way more conservative than that because things may have changed, or the institutional bid paradigm may have shifted this, or like, you know, maybe just nothing's happening on chain anymore or whatever. Kind of like PTSD or just super cautious mental gymnastics you want to do. Like I'm not even getting out of bed until this is back above like a 3 or a 3.5. And then I'll probably take this a lot more seriously once we're above a 4. But like, as you can see, we're nowhere near that. Newpol, net unrealized profit and loss. This is basically a little less diminishing returnsy, arguably. Some people could take the other line on that. But it's basically just like how many people are in profit. In the past, this is like kind of gone up to like 75-ish. This cycle we've hit kind of like 65 at these local tops. And it's fairly intuitive. It's like if you are in a risk asset or a speculative asset or even like a Ponzi, right? Once everybody is making money, you really need like exponentially more people to keep the price where it is, let alone move it higher. And so once you're at like 70, 80, 90% of people in the profit, it gets really tenuous. You can think of it kind of like a Jenga tower that's been super built up. Like, that's a terrible metaphor, but you get what I mean here. Looking at this right now, as of this thread, it was at like 50. It might be, you know, maybe in the mid 50s or up to 60 now. But it's still cold, right? Like we're nowhere near like this kind of like critical red level. And if you did draw a diminishing returns trend line here, you know, you might want to lean into this once it's in like the high 60s or 70s, and clearly like we're nowhere near that yet. So this one's pretty cold too. Reserve risk. This one is actually interesting because it is not only like a cycle top indicator, but it's a little bit more granular than that. This one has done an outstanding job of pointing out local tops. You could see when this blue line crossed the black, this was that kind of like March, April, spring 2024 local top. And then you had another one here in the holidays going into December 2024 into Jan 2025. We got a ping here. And then we've kind of had like a couple like near misses here as we've gone to new highs. And right now, or as of a couple days ago or last week at this point, this is still pretty cold. And again, like this is all from my thread, September 26th. So some of this stuff will have warmed up a little bit, but this is why I was confident that we weren't at a top. And this is stuff you can look out to the next time people start to chirp on crypto Twitter. And again, I use on-chain and Confluence with a lot of other stuff. I'll go into caveats about all this stuff at the end, though. Another one is the 1 month RSI. So RSI is just a chart pattern that points to just kind of like momentum and like relative strength and purchasing patterns. A cycle has never topped without the 1 month RSI spiking dramatically. Obviously, every cycle is a little bit different. Maybe this one will be different from all the rest, and this time's different, and this is going to be a weird, 1 month RSI distribution cycle. But in confluence with everything else I'm looking at, I think this time might not be different. So if you look at 2013, they kind of double top. 2017 came all the way up here to this trend line. 2021, even though 2021 was more of like a distribution at this like first top before we double topped, still came up here. And again, we're nowhere close. And if you look at the angle of attack here required to go up as steeply as these last RSI peaks have, that would put us into like December at the very, very, very earliest. So, by this standard, we are also still pretty cool. This one is interesting. I think a lot of like business cycle and kind of like correlative charts like this get criticized for having like overfit lines where like people look at like kind of like a cherry picked time frame. But this one, like, this is another one that's just like very high time frame and boring and common sensey. This is the ISM and kind of like PMI chart. ISM is, not to get too deep into this, it's like Institute for Supply Management, I think. And PMI is basically a metric that surveys business people, business executives, and is like, hey, are you guys growing or are things shitty? It's pretty much that simple. And you tend to see growth when there's a lot of capital and liquidity moving around and things are rosy and businesses are growing and stocks are ripping. And this correlates with Bitcoin doing well. I think they've like done a little bit of modeling with the pink line to like do a Bitcoin correlation here, but you could see like 2013, 2017, and 2021 COVID crash here. And my mental model for this cycle so far is that it has been a bizarro world stretched out kind of 2019, where we're just kind of behind the ball on the business cycle expanding because of the unique challenges posed by sticky inflation and inflation we haven't seen in decades, and that needed to get figured out before we could cut rates and other sources of like liquidity and credit could loosen up a little bit. Obviously there's a lot more complexity and drivers of liquidity than just interest rates, but this one again, I mean, like the 4-year cycle has dovetailed not necessarily with a halving, but with this business cycle, and we're curling up here, and like this has yet to expand. And again, if you look at this in confluence with everything else, it just kind of starts to seem like there is a body of evidence so vast that in a very boring and unconspiratorial way points to higher. And if you want to take a bet against this, like you could, but like I wouldn't want to. And then we've got the 50-week MA. This is a moving average. Traditionally, people have said, going back to 2017, at least, like once the weekly closes below the 50-week MA or this green line, things are cooked. And that's been true the past 2 cycles. If we go through anytime we've come close here. So going back to 2023, this is still like kind of like a late bear market. Like I think we might be seeing like some tenuous signs of recovery off the bottom, but things are still not certain. We came a little bit close to it here, but like this is just like so still thick in the bear market that I don't really think anybody was calling for any sort of worry or tops here. I remember this just being very, very boring until late 2023. And then, if I recall correctly, we got that like intern ETF, like Van Eck intern ETF news leak. Got like an explosive set of candles here, and this is really like what started the bull market in earnest. Had like a cool off here and a bunch of like, I think this is where like Don Alt's like famously like sidelined at 30K or whatever, which you got a bunch of shit for, before we just absolutely like jacked it up to like a new all-time high. And we did this all on the back of that like, holy shit, the ETF is here and it's real exuberance, which is a once in an asset class's lifetime event, and it was really exciting. Keep in mind, this all happened like under Gary Gensler and just a just hideously punitive and scary and arbitrary and capricious regulatory environment. So what happened here is people got kind of ahead of their skates, and we just like ripped to new all-time high like way early on the back of the ETF exuberance. And then people kind of paused and thought like, oh God, like what are we doing up here? Like we're at a new all-time high, like arguably like 2 years early. What does this mean? Everybody is just completely unmoored to like where we thought we would be, and people just really started to lose the plot here. This is where you started to see and hear like people start to call for like a cycle top again, which again, I put out a thread similar to the one we're going through right now, saying like, yeah, I don't fucking think so. Like we have so much boring high time frame business stuff ahead of us, that there's just no way. And this is just like the air getting let out of the balloon from like this early ETF, like once in a lifetime pump. Like, holy shit, we have these brand new rails for like institutional capital to finally enter without like any like these weird like vehicles. And the air just got let out of the balloon for damn near a year straight. And we did come down to this 50-week MA. And I was, you know, I kind of planted my feet in September and said, like, I think we're going to pump. Like, if we pump somewhere, it's going to be from here. And I felt as confident as ever that that would happen. And we did. And going into November, things were looking great. We put in this like kind of like equal high here, and then Trump, who's just like super pro crypto, got elected, and we just absolutely fucking ripped. Which this is just another like ETF 2.0. Like we were gonna have massive deregulation. It's happening again, but again, like we're just a little early in the business cycle, and interest rates are still high, and inflation is still a concern. And we got all this like, you know, bullish momentum with Trump, and like the expectations around like US strategic reserve, blah, blah, blah. And, you know, we kind of like we're putting in some complacency here. And then the not even once a century, but just like unprecedented global trade war happened. And I sold like 50% of my port going into this, just because I didn't know if the global economy was just going to get like wrecked for a couple of years. And anyway, even that, like we did not close below the 50-week MA. And I think Trump realized probably by getting, you know, a whisper in his ear, like, hey, do what you're going to do, but you're just a heads up, you're about to break the bond market and you won't be able to walk that back. The analogy I used last time was like, it's like breaking a vase into dust and then throwing that dust into a river. Like, you can't just like fix that. But nonetheless, he did walk it back in time, and then everybody who was horrified across global finance like took a sigh of relief, and we ripped out of that. And we then just kept going as like inflation came down, blah blah blah. And some time went on, and things are just kind of like trudging along here, waiting for risk on conditions to continue, and so on. Like I don't want to like drone on here, but this is like where I made the thread. We were like 108, and I thought like not only are we not at the 50-week MA, which is where things are terrifying, but like we have like a $10,000 gap, and like this is the worst they can do right now, like in light of how boring everything else is looking and how poised it looks to go up. Like I'm not sweating it until we're like down here and like flirting with this for an extended duration, plus other stuff looking bad. So another reason why I didn't think we had topped. Another thing is just like headlines. It came out that a bunch of these DATs were doing shady stuff, and the sell-off could have been like, you know, insiders selling off on insider trading fears, which is an irony. Another thing with the sell-off is like, you know, you look at ETH, shout out to Ben Cohen here. Like, come on, like this, unless we're in like the final like days or weeks of a parabolic blow off, like ETH is going to cool off here and at least like retest this MA. And, you know, it did, and it didn't even come down there. Didn't even come close to that. Another thing is like total 3. So this is the, you know, I think like top however many alts excluding, this is excluding Bitcoin and ETH. And, you know, look at this, like, you know, using this moving average is kind of like rule of thumb here. Like this was the previous cycle, bear market, came up for like this like ETF adjacent exuberance in alts, then a year of like the air getting let out of the balloon, the Trump victory, a little bit of air out of the balloon here into the like trade war, and we're just kind of like coming back up for like kind of a, you know, the smoke has cleared pump here, and then we're kind of back off this line and cruising back up here, little rejection, this moving average is moving up. Like this is just like, this is beautiful. Like how could you look at this while this is above this green line and not just think this is coiling up to explode, right? Like this is just so not toppy that it really like strains, you know, it's just fucking crazy. This is just so fucking bullish. Like holy shit. Like this is a chart you kind of buy every time, right? Like another just very boring high time frame chart that's saying like the shit is not over. Then socially, like you've got the app rankings, right? Like the Coinbase app ranking is in the 200s, and you know, if you aren't aware or plugged in, like typically we've never really topped without the Coinbase app being like the #1 most downloaded app in the App Store, top to bottom, for like a week straight, and then we've topped. I don't think that needs to happen again because Coinbase is not, the Coinbase app is not like novel. Like I'm sure it still exists on a lot of people's phones. If like, you know, somebody's crypto curious or like a potential like net new or prospective crypto person, they may already have it on their phone. So like, I don't think this needs to go to #1 again. There's also other apps. There's like Phantom and Moonshot and this and that. Like, but like these are all in like the 200s or worse. And like, I'll lean in when they're in like the top 100 or top 50, or like especially when one of them is in the top 10. But like, not now. Like I think the Coinbase app ranking is like 250, and like even today, it's still way up there, even though we pumped to 120. And then like YouTube and Twitter and this and that, like it's like still like bear market levels. So, you know, just another thing that like you don't want to take that to the bank standalone, but like everything else we've looked at, like, come on, you know, like let's be real. Um, some caveats to this. You know, I'm a moron. I don't have a like. I'm not like a finance. Guy with 40 years of experience. I'm not like some PhD quant. I'm an idiot, porn fat, and get a lot wrong, right? Like, don't take anything I'm saying to the bank. I just like look at boring data in Confluence, and it paints a picture. Um, and that's that, right? On-chain stuff. Um, I wouldn't really take on-chain by itself to the bank, and I caution people that look at the stuff we looked at and say we haven't really had too many data points to have that be super reliable. We've had like kind of like 3 data points, which is nothing. And then we've also had just enough data points to where like it's kind of a pattern that will probably get massively front run, or at least has the risk of getting front run. We also have this like institutional bid paradigm that like has sent, Bitcoin dominance higher for longer than people thought, and this and that. Like, again, like those things are beautiful as Confluence, but like don't take them by themselves. I think that's like a very dangerous thing to do, and I think that like they'll probably still ping to like some diminishing trend line. But like I think there will be people who don't look at a diminishing trend line and look at those in isolation will probably get fucking destroyed. And then there's been like some signs of froth, like the DATs have been kind of like ugh, like there's ETF rails, like there's so many different ways to get exposure to crypto, even on the institutional side. Like, why are these a thing? There's like an avalanche DAT. Like, I'm just like, oh, this is kind of gross. I don't like seeing this. But if you have been paying attention, like we've seen like signs of froth similar to this going back to 2023. So if you're just going on like social froth, like McDonald's saying wag me, like you would have probably sold 2 years ago at like 25K. So like again, you have to kind of just look at this in Confluence with everything. And then another thing is like this whole prediction panned out pretty well because we like ripped to 124 so far. But I think there's a good chance this cycle extends deeper into 2026 than people are mentally prepared for. I don't really have a ton of edge in making like short and mid-term predictions, but like I think there's a world where like we get a like intermediate drawdown and then like come ripping back to an even higher high like to like early to mid 2026 or later. So like no 2 cycles are alike. You never know. Like, just in absence of being able to predict stuff, just make sure you have a plan. But yeah, I also want to look at this. This is like kind of a log view chart of Bitcoin. The blue lines are just kind of like a rough guidepost here. You can see we kind of like went to the lower part, then kind of like flirted with it, then went back to it. The mid one is like kind of more or less where support's been. And I just want to talk about alts and the fact that people who haven't been glued to the charts or space 18 hours a day for, X amount of years will not really recall this super well. But like, as we pump, like we haven't really had a proper liquidity expansion phase or event in over a year. The last one we got was after the air got let out of the blue in 2024. In September, we bounced pretty hard, and then that led into the election, and then we got like the hey, deregulation is still going to happen. Maybe the government's going to start buying Bitcoin, just ripper. And everything went nuts. Like meme coins went back to previous highs. Sol went to an all-time high. Like this was just insane. And this was like a meaningful liquidity expansion phase where there was just a lot of new capital or like very, very long dormant capital that flooded the market and everything ripped. And we haven't, the chart might deceive you, but like we haven't had that since fall of 2024. And this rolled over in December, January. Like Bitcoin put in, like, eked out like a higher high here. Some AI stuff, like in a kind of a narrow sectoral rotation world, did well in here. But like most alts, even all the way up here and through January, they went to like zero all the way up here. And then when the trade war shit happened, they went to like 0, 0, 0. But like liquidity expansion didn't extend through here. It kind of ended like late November. So then the global trade war thing panned out. And this move back was just kind of like horrified, terrified capital, like re entering and doing like kind of like a partial rehydration echo pump on a lot of like large cap memes and alts and Sol and ETH through here. But like this wasn't this, right? Like, and now as we kind of like shoot back up to the 120s where we're at, today, this chart's a little bit more recent. Like, we're going into Q4 seasonality. We're going into 4-year cycle meme, which is like, markets move based on psychology and just prevailing belief and confidence, right? And if you have, regardless of like, having supply crunches, which haven't been a factor in a while, and this and that, like if people think that we're going to rip in Q4, that's powerful. And you have all these other charts that are pointing to higher. You've got like the Russell, which is an index of small cap stocks, which is about to break out for the first time since it broke out last time, at which point crypto went fucking nuts. You have copper and gold. You have the ISM PMI business cycle thing curling up. You have like the Fed refilling an account to the tune of like 750 billion or however much it is, which acted as a liquidity drain for many months. That they finally refilled their account to a level that they keep it at. There's just so much shaping up here for this to be a new liquidity expansion phase that like anything could happen. But like gun to my head, I think we're going to get a decisive leg up through the end of the year. And that's in contrast to it being over, right? Not only do I not think it's over, but I think there is like probably in my mind, for me, like a 90% plus, if not like a 95% plus chance that we're going to like rip to dramatic new highs, or at least decisively higher, not like 125, 128, or even 130. Like mid 130s to like 150 or 160 on this leg if you like forced me to make a prediction. But I really don't know. I would just say higher. And I think the difference here is, even though I think Bitcoin dominance will continue to go higher, I think that we're going to see new highs on ETH and either like an equal all-time high on its USD pair on Sol, if not like maybe even like new USD all-time high in Solana, maybe even as high as like $400. Like I don't know, right? Nobody knows, but I think it's all gonna happen here. At least that's my prediction. Like we could get like kind of like a stinker, like some Middle East FUD or Russia FUD or something, and then it kind of like delays stuff into spring. Who knows? But my base case is liquidity expansion should happen soon, if it does happen at all. Otherwise, I think it would then get kicked down the road a couple months at the worst. But yeah, anyway, that is what I'm looking at right now. Other stuff that I think is interesting is Coinbase is partnering with Samsung to put the ability to purchase crypto and onboard crypto natively onto 75 million handsets in the US, if I read that correctly. And then Trump is talking about a $1,000 to $2,000 potential like tariff tax rebate. And I mean, if those two things happen, you've got extremely similar circumstances to the 2021 alt explosion, where you have stimulus that's broad and then like deregulation on top of it, and this huge expansion of like marginal buyers. I don't know, promising stuff. Anyway, this was a very long video. Thank you for hanging in there. If you are crazy enough to still be listening, I will catch you guys on Twitter. Thanks, guys.